Shares of Celsius are down 71% from their peak, but they're now starting to look like they're in pretty good value territory. Let me just give the numbers here. As I'm recording on Wednesday, shares are trading for a 36 price to earnings multiple. On a forward basis, it's a 30 price to earnings multiple. Price to sales is about 4.6. And remember, this is still a growth company, still a company that's taking market share in the energy drink space. I think there's a much bigger market for Celsius than just energy drinks because the product appeals to a much wider audience of people. But let's put some of the performance into context, because right now investors are thinking about the most recent quarter, and that was a really bad quarter as Pepsi, their biggest distributor in the US, is adjusting their inventory. They basically overbought inventory in the year or so prior, and now they're reducing the inventory that they have on their balance sheet, optimizing their business. That has affected Celsius's sales because Celsius recognizes revenue when they sell into the distributor, not when it's actually sold to the end customer. So it's a little bit of a confusing situation, but think of it like overfilling a swimming pool and then having to drain a little bit of the water. That's kind of what the inventory situation is like for Pepsi, and the impact on Celsius was over $100 million in less sales in the most recent quarter than they expected. But that doesn't mean that people are drinking less Celsius. So let's get to some of the numbers. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start out with a chart of Celsius's revenue and net income, because this shows what the last year looks like. You can see sales is $1.37 billion, net income $214 million. Despite everything that happened last quarter, and sales dropped from $384 million a year ago to $266 million, Celsius was still profitable. And that's because this is an asset light business. They don't own most of their co-packers. They actually bought a co-packer recently, but those are the companies that actually mix and then bottle the beverages. But Celsius doesn't own most of that infrastructure. They're licensing that out to third parties, and then they're just telling them when orders come in and when to deliver product to their distributors. So that allows the company to be profitable despite sales dropping like it did last quarter. But if you look at the quarters prior, you're averaging about $75 million in net income per quarter. So figure $300 million in net income, and just keep that number in mind. I think that's kind of a normalized number for Celsius. But look at the balance sheet here. This is something I think we often overlook. There is $904 million in cash on the balance sheet. Celsius's market cap is $6 billion as I'm recording today. So about a $5.1 billion enterprise value is all you're paying for the stock. $5.1 billion enterprise value, normalized earnings of about $300 million. That would put you at a price to earnings multiple of about 17. That's a pretty attractive multiple for a company that is continuing to grow. Remember, Celsius had negative sales growth in the most recent quarter, but that was largely because of the impact of inventory changes at their distributor, not people buying less Celsius at the end market, at retailers. So that's what we need to keep in mind here. Now, the question for Celsius is going to be going forward, are they able to increase their market share? Are they able to increase their areas that they're distributing? And are they able to increase their margins? Those are the questions that we have outstanding. There's been more discounting that's happened recently, and I think that's something that has really worried investors. So those margins may not be what they were a few quarters ago, but that doesn't mean this isn't going to be a really good business. And also want to put the international growth story into context, because I think that is something that we often overlook with Celsius. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. What I want to start with these international markets is how it compares to North America. You can see from this chart, North America, vast majority of revenue over the past 12 months, $1.3 billion in revenue coming from North America. In total, the rest of the world accounts for a little less than $70 million in revenue, but they're starting to grow. They're starting to add more geographies where Celsius is going to be available. And remember, you have those co-packers that are actually bottling the product and actually putting it into a can, and then distribution partners that are actually getting it to retailers. So if you just look at the growth rate, and these aren't crazy growth numbers and they're off of really small bases, but Europe's revenue is growing at 16% compound annual growth rate since 2020, Asia Pacific 28%, and other geographies 111%. That's a really small number coming from those other geographies, but now $7.1 million in revenue. So as Celsius begins to expand around the world, there should be more opportunity available for revenue growth. That's going to increase the margin for the business and the profitability that we have long term. So if the business stabilizes and we get back to kind of a more normal growth rate, I don't think this is a company that's going to grow at 100% a year like it was previously, but you've got a really good balance sheet. You have a product that I think is really attractive to a lot of markets. It's a capital light business, so it should be very profitable. So if you can get to that point where you're generating $300, $400, $500 million in net income and cash flow coming in from the business each year, and you're buying shares at an enterprise value of a little over $5 billion today, I think that's a pretty good value. So as I'm recording, shares are $27.71 at the close of trading on Wednesday. I think any significant pullback from here, if the shares get to $20 per share, this is going to be a no-brainer buy in my opinion. And the other side that we need to think about is the acquisition side. Pepsi made a huge investment in Celsius. That really fueled a lot of the company's growth. But Pepsi is kind of holding its position over Celsius, and Celsius is a growth driver for Pepsi, or could be a future growth driver for Pepsi. So if they could pick up Celsius for a reasonable valuation, that could be a backstop for the valuation. I think that is something that we need to think about. If shares continue to fall $20, $25 per share, I think eventually Pepsi starts to look at this company and say, you know what, it would make a lot of sense for us to just acquire Celsius, bring that packaging into our ecosystem, bring that distribution and the branding together. They've done this before with other brands, and I think that would ultimately make a lot of sense. So I'm not saying that is exactly what's going to happen, but that sort of limits the potential downside for Celsius at a certain point. So our shares too cheap to pass up today? We're not quite at that point, but we're getting pretty close. And if Celsius over the next couple of quarters can show that this is a business that's going to grow double digits, I think then you will see that the price we're at today, $27.71 per share, that's a really attractive valuation for a company that continues to grow. But obviously investors are worried. Those margins are going to shrink. Revenue is going to potentially shrink in the future. And competitors are coming into the market and are trying to protect their own market share. So a lot of things to think about here with Celsius, but I think the stock is looking much more attractive today after the pullback than it was previously. I'm down a little bit on my position in Celsius, but not a whole lot because I wasn't buying at $100 per share. I was buying back in the $30, $40 per share. So hopefully we'll get another good buying opportunity for Celsius in the future. But let me know what you think about the stock from here. Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. And thanks for watching, everybody. See you here next time.